Today we're going to be talking about, can I get a VA loan with no credit score at all? The answer is yes. Yes, you can. And look, this is one of those things that not a lot of people know. I actually had a couple members on my team that when I was like, no, we can do that, they were like, wait, what? And I was like, yeah, we can, but. Okay, so we're going to talk about the but today. And you know, it's not negative, it's just you have to understand what you're getting into. Okay, so I'm going to cover with you what you need if you have a 0 credit score in order to do a VA loan with us. Okay, now what I'm doing is I'm going through my company guidelines. I work at Guaranteed Rate Mortgage. Is it possible that another lender does not offer this? Yeah, totally possible. Is it possible that another lender has different rules? Absolutely. As I say in many videos, VA, it's very gray, and lenders have different interpretations of different rules, and they can make their own overlays or guidelines based off of those. So this is how my team would handle it. I want to be really clear on that, because sometimes people go to other lenders and they're like, well, Jen, you're wrong. They said you were wrong. And it's like, well, they have different guidelines. Like, so, okay. So you have no credit score. The first thing we would do is we'd verify you have no credit score by pulling a traditional credit report. Now, if you have a really bad credit score, that's not no credit score. No credit score is I have to get back that they have insufficient data in order to give you a score, okay? Now, if I look at that report and it's just filled with lates and collections, even though it's a 0 score, I'm out, okay? I need a true, clear credit report, 0 score. That's number one. No lates within the last 12 to 24 months, no drama. Just like, I'm thinking of, you know, the person who's always hated credit, who never wanted to have any in their name. I'm thinking of the person who went through the Dave Ramsey program and did the baby steps and got rid of their credit score. That's who I'm thinking about. I am not thinking about someone who has terrible credit and just ignored it for a year. And now it's a 0 because they ignored it for a year. That is not what this program is for. So I want to be really clear on that. And if you guys have bad credit, I don't want you to feel like I'm slamming you. I'm not. You guys can fix it. You can get your score up. I did it when I was out of college. I know you guys can do it too. So, okay, I continue. What am I gonna require? Oh my God, so much. Pint of blood. Just kidding. Okay, so 24-month housing history. Yes, I am going to want to verify that for the last 24 months you have been making rent payments or housing payments of some sort, and I'm going to want to make sure those are paid on time. Yes. In addition to that, I'm going to need 2 of the following. Either a telephone service, so like your cell phone bill, and a utility bill, so that would be water, garbage, electricity, gas, or if you don't have a cell phone service, or if you're under your family's plans, which a lot of people are, then I would want 2 utility bills, okay? And if you're like, well, Jen, what about, you know, I have a gym membership. No, we really want those utilities. We want to show that you have a history of really overall housing payments, because the traditional credit report, when you have a score, it shows us how you've paid stuff historically. Since we don't have that, we're going to be looking for very specific stuff. So we're going to be looking for that, and the key is going to be no lates. So the housing is going to be 24 months. The utilities are going to be at least 12 months, okay? So what I would always say is before you apply, check, because a lot of times I'll get into it, you know, and we'll get deep and people will start getting excited about buying a house, and I'll be like, you didn't pay your gas bill like 4 months ago on time. You're late. Like, you got something else? Like, so do a little pre-look before you guys, you know, have us do it, just to make sure that you're on time with those utilities for at least 12 months, and then with the housing for at least 24 months. Okay. What else? Well, the other thing is we do have a debt to income restriction on that program. So what that means is that traditionally with VA, let's say you have a 640 credit score, I can go as high on debt to income as the computer will let me. I'm also looking at your residual income calculation, of course, but it would be very normal, or not normal, but it would be not out of the norm to see a 50-55% approval, meaning your debt to income's 50 or 55%. This program caps it at 41%. Okay, now how do I feel about that? I'm actually okay with it. Like, realistically, if you can keep your total debt payments, meaning your credit cards and your student loans and your housing and your car payment, all under 41%, you will have a good life. Okay, unless you're just terrible with money. But when you start getting into that 50 and above range, it is very scary, especially especially right now because of inflation. It's like, you know, if gas goes up $1 more, a lot of people are going to have a hard time making their mortgage. So I think it's really important that you guys are mindful that even though this has a 41% cap, it's really not a bad thing. You know, if it was a 30% cap, would I think that's extreme? Yeah, I would. 41, that's okay. I mean, conventional is really about 43, so it's just keeping you in that ballpark. Now, the other thing is the pricing on the rate. So whenever, and I get this question a lot, like I had someone text me, they're like, what's your VA rate? And I'm like, there's a lot of factors. You know, how much are you trying to borrow? What's your credit score? And with VA, you don't see the same rate hits that you see with conventional. However, is there a difference in rate between an 800 credit score and a 620? Yes, there is. Slight difference, but there's difference, right? And with this program, we're not going to be pricing you as if you were 800. We're going to be pricing you as if you were 620. So if you're thinking home ownership's a couple years away from you, I would encourage you to start building credit. I've done a couple videos over the last 4 years, oh my God, a long time, about how to build credit. I've got a classic from my early days. You guys can laugh at my makeup. I really tried too hard. But it tells you how to build your credit. So if you're thinking longer term, I would build your credit because you do, it's a lot easier of a process for you. We're going to be getting less stuff from you, and you're also ultimately going to get a better rate. Now, would I say wait to buy a house to build credit? No, I wouldn't, because, you know, if you need a house now, 620 is not the end of the world in any way, shape, or form. We're talking about maybe 1/8%. Quarter on a really bad day. We're not talking about a full percent difference. Now, if you talk to some lenders, will you see differences like that? Yes, but we've been very mindful with our VA pricing to be as lean as possible. I mean, that's the bottom line, as lean as possible. I mean, I fight every day to get as lean as possible, and my company's really behind it. So I think we're good there. So questions, comments, anything, please, please, please reach out. I am licensed in 48 states and happy to help you. You can leave a comment here. My cell phone's pretty much everywhere now. And then you can always book a time on my calendar. If you book a time on my calendar, you're probably going to be talking to Alyssa at first, because really where I come in is once you guys are fully underwritten, that's when I spend 45 minutes on the phone with you going through everything. So yes, we can do no credit score with a VA loan. So please don't feel discouraged. If you have no credit score, you can still get a house. We just have to do a little extra homework. So thanks so much for watching, guys, and I'll see you next week.